Okay, welcome everyone. Welcome to the channel that tries to make you money. We're going to go through the stock market technical analysis today, really just using the charts to be our guide. Again, we're trying to put the probabilities in our favor with these stock positions. So we're going to start out with triple Qs, tech sector, as I always like to do. Again, one of the reasons why I like to start out with the tech sector is, for one, I like to trade it personally. And two, it moves a lot. If we can catch the move in tech, it's usually an outsized move compared to like the S&P 500, which has some defensive stocks in it. So we're always looking for trying to determine where a stock might go next. And you want to find the largest move you can, obviously, to make the most amount of money. So drop me a thumbs up if you guys are finding value along the way. I do appreciate that, and it does help out the channel. And also, as I'm going, if you're interested in learning this skill set, because it is a skill set, it's not something you can just jump in and you can just be successful right off the bat. Take my stock market technical analysis course. I priced it affordable for all, so it's there for you to use as a tool to help you learn this skill set. Link in the description below. All right. So getting started, triple Qs. I don't think a whole lot's going to happen today, to be honest, guys. We've on the triple Qs on the daily chart, we're just right there above the 200 simple moving average, and we're just we're likely going to trade up here for a day or two. All right, maybe tomorrow, a couple days. We have the jobs report coming out on Friday, so maybe we'll just be up here until then. That might be a catalyst to get this to move. But here's the thing that I'm looking at. The last time we traded above the 200-day moving average, simple moving average on triple Qs was right here, and that was followed by a big pullback, and we're just above it right now. So yeah, it looks bullish from at first glance, but I'm looking for downside here. Looking at the hourly chart, you can see that we still have that negative divergence, and I pointed this out in yesterday's video. My momentum indicator, this is my RSI, and again, we're not looking for overbought and oversold. What we're looking for is direction of momentum. And as I zoom in on the RSI, you can see still holding that negative divergence, starting to confirm. We've started to come down. So we have a lower high in momentum than the previous high, and yet price continuing to move higher. Again, we don't chase price. We look for momentum to be the leading indicator of where price goes in the future. Nothing's guaranteed. It's all about probabilities. All right, so we're just kind of chopping around. I suspect, and I'm going back to the daily now, I suspect we just kind of, we could get that big pullback today or a big sell signal. Maybe there's some catalyst news headline that gets floated out there, but I don't know. Probably not going to be much. As you can see right today, it's a very thin trading range. We're just going nowhere. So just hanging tough. I am short this position, looking for more downside. So again, my impression, just to kind of iterate the longer term thesis here, is that we are in a bear market. Triple Qs entered a bear market. All right. So there's no denying the fact that if you want to say the official reading of a bear market is down 20%, well, here's your all-time highs, and we fell 22.5% in the tech sector. Okay. So that's an official bear market in tech. And it's very unlikely, if you're going to be in a bear market in tech, to not go into a bear market in the broad market. The market cap weightings of tech in the broad market is so heavy that it just will drag the rest of the market down. So what I'm looking for is, this is our first leg down in the bear market. We had a very nice impulsive bear market rally. I didn't catch all of it. I did trade. I went long on Facebook. I caught some of it. But I was on vacation when this rally had started. So I wasn't, there to actually trade it and read the market too much. But bear market rally right up to the 200-day. Now, the 200-day is likely the area where we get rejected. Probably going to be an impulsive rejection. I would expect that we're going to gap down and trap that's how the bear markets typically work. They're going to trap the long money. So I'm kind of looking for a gap down, but we'll see. And then I'm looking for that next leg lower, heading all the way down to our next profit target of about, it's about 300, 299, somewhere right in there on triple Qs for the next leg lower, possibly even lower. If you look at like an ABC pattern, that's kind of a very common corrective pattern. And the C wave is usually the biggest. So you got the A, the B, and then maybe the C it could bring us all the way down to this 261 area down there. Now, why would I? And that's where I would think we would head, because again, if you look at the weekly chart on triple Qs, this is your bull market going back to 2009. So this is every candle is 1 week, and here's your big long bull market price channel, nice solid channel. This is COVID, so you kind of throw that out a little bit, but we have several tags of that. So there's your bull market price channel, and the bottom of that channel is down there. So I think that's where we're heading. I think we're going to break down into the channel and head down to the bottom of the channel. And even if we do that, we'll still remain in a longer term bull trend in tech, even though this would be a full-on bear market and a pretty big correction, or a good-sized bear market in tech. Still puts us in a longer term bull trend. So until we see that break, and that's way off in the future. If this breaks, then, bigger things are happening. But all I'm looking for is a move as of right now down here. So from where we're at right now, another 30% or so to the downside. Okay, moving on to small caps. And we'll start out with the weekly chart. So on small caps, you can see here, this is your big sideways trading range. Really for almost a year. I think it was actually maybe slightly over a year, but almost a year. So a big kind of topping pattern. Just we went really nowhere for that entire year. Finally broke down. Big impulsive sell candle right there. See that big red candle breaking down impulsively? That's your sell signal on the weekly chart here. Now what we've done over the last few weeks after that initial sell signal is come up for a back test right here. We're above it slightly, that resistance level just slightly, but again, week's not over. I suspect that it will that this will prove to be resistance. So moving on to the daily chart, you can see that we're just right there below resistance. Now maybe intra-week we could run up and hit this 200 and then have a pretty big reversal by the end of the week. That's possible, but ultimately, this is the area where I think it makes sense to be shorting this thing, at least in my opinion, because we've got big resistance right here, 209, little popping move above it. To me, that looks like a bull trap or a stop rate, things like that. Basically, I think we're just going to trade around here for a little bit and then roll down. All right. Looking at the hourly chart, clear negative divergence. See the hourly? Let me zoom in on the RSI. Clear downtrend in momentum. And the PPO here, clearly downtrending. Look at the PPO right there, starting to turn down. Now, you don't have the full crossover yet. When you get that, that's kind of full confirmation, but it's headed straight down. So we're looking for that crossover, but it's definitely looking like it's confirming. And that means momentum is starting to wane, all right? So price should be next. We should see price start to sell down next. So again, I'm short this thing. Looking to, looking for the next leg lower in IWM, which I see is all the way down here at about the, I've got a zone of support right in here, down to about 170, up to 173.5, somewhere right in there. Looks to be a zone of support, and that's where I think we're heading next. Let's look at bonds real quick, TLT. So again, if people are buying bonds, then they're likely looking for near-term safety. All right, gold and bonds have traditionally been safety. Now, I don't think bonds are long-term safety, just given the rate where inflation's at. Inflation is really the worst for bondholders because they're locking in their money at a set rate, and then inflation eats away all the purchasing value, and then, it's just a bad deal when you have inflation. But TLT, we've got this trend line to watch right here, this downward trend line. This is your COVID crash. You got support, and then just recently we had a reaction right there. So we've got 3 reactions. That's enough to give us a valid trend line to watch, and we're bouncing off of that trend line. All right, so things to watch on that. If I look at the daily, we've also have some slight bullish divergence on the RSI. It's not there on the PPO quite as much, but you do have it there on the RSI. If I look at the hourly here, you can see that here's some bullish divergence showing up right there. All right, bullish divergence on both PPO and the RSI. So this little low, when we dip down essentially right here, we dipped down and made a new lower low, hit that trend line, and also had bullish divergence. So that means it's likely we're going to get a move higher, and we've already started to see that. So this could be in anticipation of the next market correction, because if you see that market correction, you should see people run into bonds for safety, at least in the short term. So that's a possibility, and you might see, institutions taking long bond positions ahead of a drop in, they want to be ahead of it. So that might be what we're seeing in the short term. Okay, oil. Well, I'm on Tesla here, so we can cover that. But oil is, we'll go through that next. Tesla, just testing this trend line right here, a couple days in a row. We got 3 days right now. Looking at the daily chart here, you can see that was your former support area. And we can probably adjust this line just slightly, but maybe make it like right about there. And you've got support through here. There's support. There's some more support. There it hit again. Lots of reactions to validate that trend line. And you can see we've just had a straight parabolic rally right into that resistance. This is consistent with what a bear market rally looks like. The biggest rallies come in bear markets. So nothing guarantees that we're in a bear market, but usually you see these kinds of rallies where things just go kind of straight up during bear markets, because in bear markets, you have a lot of shorts that get into the trade towards the end of a big down move. And then also you have panic sellers. And then as soon as that's done, the dip buyers step in and the shorts start covering. In a bull market, you usually don't have as many shorts. So you just kind of have buyers buying the stocks, the dip buyers, but you don't have the shorts participating quite as much. But in bear markets, you have a lot of shorts. So it's kind of feel for the rallies when you get them. So there's a nice impulsive rally right into major resistance, testing it for a few days. I do expect us to reject. There's a gap here right there at about, we'll say that gap is about 1,025. So I expect we'll reject, hit that, probably get a minor reaction, and then continue lower. Looking at the 1 hour chart or the hourly chart, you can see here we are putting in that negative divergence right there. So each one of these little highs that we've been making in price have been divergent highs. And here's your PPO. Again, confirming we've had the crossover now. That's confirmed bearish divergence. And looking at the price, you can see we're just kind of ticking up there, making slightly new higher highs, grinding around. This looks like topping action, and we're about to roll over. Oil, just holding this bullish trend like a champ. You can see here, clear uptrend on the daily chart. This starts back in December. Clear uptrend channel. We had a pretty big impulsive pullback, but all it did was pull right back to support. The buyer stepped in. Again, pulled back to support just yesterday. The buyer stepped back in. So still bullish. I don't see any divergences on the daily telling me that this bullish trend is over. So you can see here we have, let me kind of clean this up. We have negative momentum recently, and we have negative price action. That's not divergence. Divergence is opposite, right? It is price moving in the opposite direction of momentum. So we have price and momentum moving in the same direction, right down to support. I do suspect we continue this bullish trend, and the momentum should start to turn up as well. So higher prices in oil, most likely. I don't see any reason to short this, and this is likely going to continue to put pressure on the Fed. The Fed's really in a tight spot, and everybody is talking about it. But basically, with inflation running extremely hot, the Fed has a lot of pressure to put this inflation to bed. But they can't really do that, because if they do that and they raise interest rates, you've got a sovereign debt bubble with the government having huge amounts of debt. They won't be able to afford the interest payments. You've got corporate debt, and as the interest rates rise, corporate debt has to compete with the risk-free rate, which is the treasury rate, basically. And a lot of the rally over the last 10, 11 years has been due to stock buybacks. So corporates are selling cheap debt because of the low interest rates and buying back their shares. As that debt becomes more expensive for them to sell, it becomes less of an incentive for them to buy back their super expensive shares. So that's something to note, and take notice of. So watch this inflation trade. Oil continues to look like it's going higher, at least in the short term. Okay, that's all I got, guys. I did want to point out that I do a Saturday morning live stream right around 9:30 Pacific time. So if anybody's interested in joining that, what we do is I go through all the stock picks that everyone has. So if you've got charts you want me to analyze, Saturday morning's the time to throw that throw that my way, and I'll get to those and we go through that. So join me on that live stream. We're looking for trade ideas. Drop me a thumbs up and check out the stock market technical analysis course. Thanks. Catch you on the next one.